That Ashwini, you decide that?
So welcome to all of you. Let's start this joint ITFA FEDAI webinar. Welcome to all of you. We're getting to more than 100 this morning in Europe and this noon in India. This is a pure delight to be connecting with you to go local, as I like to say in India, for ITFA, and to have a strong collaboration with FEDAI in order to talk about the trade digitization and regulatory developments in India. We definitely on the ITFA side have seen that the recent months with the lockdowns have raised the importance of digitization, no doubt. So we want to update the Indian community and certainly the Banking Association, the FEDAI, and the key players about the initiatives that ITFA as a global trade association has taken over the last year to increase digitization and automation of trade flows, but also to look at the regulatory advocacy, because technology without the appropriate policies is not giving us as many benefits as it can. So we will definitely focus on both angles, technology and regulation in the next hour. So we will talk about various aspects. So this webinar is definitely aiming to share the latest status on what is happening outside of India, what is such as in the UK, what is happening in India, and look at how those developments can be further progressed by working collaboratively, not only with technology companies, but also with the policy makers. So definitely we see this session as a start of a strong collaboration with the Indian market, not as an end. We have invited on the INFAT side some of our fintech players and regulatory experts. So here is the agenda we have prepared for you. Focusing indeed on the two aspects. I will not go through this in order to make sure we focus on the content. So with this, I'd like to invite Mr. Shindvani to introduce the session. Mr. Shindvani, over to you. Maybe I can unmute Mr. I will unmute you. Yeah.
Good afternoon and welcome everybody to the webinar on trade digitization and regulatory developments in India. First of all, let me apologize for making you all work on a Saturday, and particularly thankful to our friends from Europe who has joined us early morning on a weekend. Thanks everybody. In India though, as we were discussing, we are used to working on the Saturdays and even on Sundays, but I'm glad and thankful to you people who are joining in from London and Italy. Thank you very much. I'm not a trade expert, not a tech expert either, but still I'm here today just because of my role playing. I'm playing in FEDAI and being a banker, where I have witnessed the transition in banking from full manual paper-based analog format to the digital formats. And what we are now looking at it, we are kind of sort of at the cusp of total digital transformation, making efficient use of the digital technologies to leverage and convert our business to digital businesses. As said by Professor Klaus Schwab, founder and executive chairman of World Economic Forum, we are seeing right now is the fourth industrial revolution, where the new technologies that are fusing the physical, digital, and biological worlds, impacting all disciplines, economies, and industries, and even challenging ideas about what it means to be human. That I think is getting too far. But as for the financial world is concerned, we are already seeing the integration of different techniques and domains, banking and finance, or finance and technology, which we are calling the fintech. All that collaboration integration is already happening. Already this year, ICC has launched the Digital Trade Standards Initiative, a cross-industry effort to enable the standardization of digital trade. This effort will bring greater economic inclusion, connect digital islands, and ensure the all-important collective nature of formats and processes. International trade, as we all know, being a cross-border activity, it is important that our efforts are aligned with similar initiatives being undertaken in other geographies, especially the ones we share strong trade relationships. Key to the success of such efforts is to harmonize regulatory requirements, development of common compatible universal standard in policy formation, and ensuring interoperability of technology. Today's webinar in collaboration with ITFA is a step in that direction. ITFA, founded in 1999, is a worldwide trade association for companies, financial institutions, and intermediaries engaged in global trade, forfeiting supply chain. To share with us further details and talk about two important projects ITFA is currently working on, Digital Negotiable Instrument, DNI, and Trade Finance Distribution Initiative, we have with us Mr. Andre Kastman. Andre is an independent consultant in the trade space and chair of FinTech Committee of ITFA, leading both DNI and TFD initiatives. Andre is also a founding member of Technology Experts for Regulatory Action, TERA initiative. He is a member of WTO, Trade Finance Expert Group. Welcome, Andre. Thanks for joining us today. TERA, as we talked about, mentioned just now, the task force will provide, there is a technology expert for regulatory action, is the task force to provide global coordination as well as fintech and legal expertise in support of country level action performed in collaboration with banks and banking association. We have with us today Akhile Tenchini. Akhile is an extended banking career in transaction banking and is a founding member of the TERA initiative and also a co-founder for TradeStream, which is an ITFA fintech member. Welcome, Akhile. Thanks for joining us today for this webinar. We can't be talking about international trade without making a mention of ICC and UCP. Article 5 of the UCP, which we are all familiar, would have quoted umpteen times, states, banks deal with documents and not with goods, services, or performance to which the documents may relate. That is the key why we always feel that it's very important that documents, physical or digital, must stand the test of law. And to help us understand the legality of the digital transformation, we also have with us today Sean Edwards, Head of Legal at SMBC Europe, and a member of the ICC Executive Committee and Chair of ITFA. Sean is also a member of WTO Trade Finance Expert Group. If I may quote in Sean's word, he feels that the principal obstacle we have encountered have been legal and not technical. It's unlikely that digital negotiable instruments would be valid under the current English law. And as we all know, Indian laws are predicated on the English law. So it's equally important for us also to understand the intricacies and also to see whatever efforts we are making in India, is it aligned, is it going to meet the test of legality, or how should we take care of all those pitfalls or the issues going forward. With that, I hand it over to Andre to take us all through the developments in other geography and the details and share their experiences and expertise with us. Thanks all of you once again for joining us, and over to you, Andre.
Thank you, Mr. Shinvani, for this nice introduction and excellent overview. We're going to go deeper indeed in some of those initiatives led by ITFA. And with this, thanks, Mr. Shinvani, for introducing myself and Akhile. I would just want to introduce now Sean Edwards, who is the head of legal at SMBC Europe and a member of the ICC Executive Committee and also the chair of ITFA. Since a long time. So very a strong person here on the legal and the technology side. Together with Sean, during the Q2 and the Trade Street team, Akhile, Sam, we founded indeed the TERA initiative because we thought it is important to pursue the regulatory advocacy and not just to promote technology in isolation. Sean and I are indeed members of a WTO trade expert group. So with this, I'd like to ask Sean to present us the ITFA as an organization, but also the DNI initiative. Sean, over to you.
Thank you. Thank you, Andre, and thank you, Mr. Shinvani, for those kind words. Thank you to all of you who are joining us late morning, I think, for you in India, a little bit earlier for us here in London and Europe. Before we get on to the meat of what we're going to talk about today, and I do endorse that quote that was attributed to me, which I think I did say, which is that essentially the law is lagging behind the technologies. The technology is really advanced very fast. There's a lot of things we can do. In my opinion, the limits of what's possible have not yet been tested, and it's a very exciting time to be involved in fintech. But why ITFA? And thank you for the FEDAI for inviting us. And why did they choose us? Well, simply we are, I think in membership terms at least, the biggest trade finance association in the world. We started in 1999, as Mr. Sinwani said, with something like a dozen members, predominantly in Europe. We are now 300 plus members covering really the whole globe, Africa, North America, where we have taken over a sister association. Europe, of course, is still very strong, but Africa and Asia as well, including China, where all the major banks are members of ITFA. So we started, you can see here in the light blue boxes, really with sort of transaction banks. To that we added a few years ago insurance companies and brokers. All the major brokers are members of ITFA. We have a very, very active insurance committee, and that's actually a really exciting tool for distributing trade risk. And of course, we have the people who tell you how it's done, the law firms, consultants have joined. But more interestingly, our recent membership has come really from the fintech, the alt-fin, the technology providers, and also very importantly, and we'll talk about this a bit later, the institutional funders and asset managers. So these are the people who are looking at trade assets as an investable class. We all know trade is safe. Mr. Sinwani mentioned the ICC that has shown, I think very conclusively, that trade is a very safe asset class. The challenge, I think, for a lot of the funds is that it's not, generally speaking, a very high yielding product. And that's been a little bit of a problem for them, but in a very low interest rate environment, negative interest rate in many cases, these assets are more attractive. And there are various ways of improving yield, the use of insurance being one of them. So increasingly, we find that our fastest growing membership is in fact from these areas. So thank you, and I hope that you'll continue to be interested in it. So anyway, let's go on now. If you can go next slide, please, Andre. Thank you. To talk about the DNI, and this is something that I'm very passionate about. We started as an association in 1999 in one market, the forfeiting market. Originally, ITFA was the IFA, the International Forfeiting Association. As our remit and scope got bigger, we added trade to that because, as has been mentioned, it is not just the forfeiting market, but supply chain and trade generally, origination, risk distribution, and so on. But really at the core of what we did was, at least back in the 80s and 90s, when the forfeiting market was very, very strong. It still exists now, but it's often not called forfeiting. But this was centered around negotiable instruments, bills of exchange and promissory notes. The law, as Sinwani has mentioned, in India is very similar to the UK. In fact, it's pretty much copy and paste. In actual fact, if you look at the dates of the two governing statutes, you'll find that India is a year ahead for various historical reasons that I won't go into. But so India, then part of the British Empire, of course, was actually ahead of the UK. And there's a similar picture across the whole of the Commonwealth, and those countries that are not part of the Commonwealth tend to follow what's called the Geneva Convention based on French law, and that is very similar in effect. But the problem with negotiable instruments is that they rely on paper, and as has been already mentioned, one of the consequences of that is that the use and the usability, if you like, of these instruments has increasingly become difficult, especially during the pandemic. Of course, the paper documents need to be couriered around. Couriers were not available. Offices were closed. and it became very difficult. So if you like, that's accelerated a move away from these instruments. Excuse me, a move which was already going on for a long time. But at the same time, it's also accelerated a realization that what we need is a very simple and legally robust payment obligation in trade finance. So the wonderful thing about negotiable instruments is that they're independent of the underlying transaction, and they're negotiable or transferable. So what we would like to do, what we wanted to do, what we have done within ITFA is to make these really very useful, well-recognized, globally recognized instruments, turn them from something that is in paper form and make them into digitally native original documents. That's to say, these are instruments that are born, live, and die, if you like, are settled on the blockchain. They have no existence independently of that, but they do have all of the key attributes of what of the paper-based documents. And really, the simple reason why paper is not recognized, there are arguments that actually it is valid in some countries, but there's even in those countries there's some doubt. The reason is actually precisely this this precedent, these 100, 200 plus years of precedent and law, of course, originally introduced at a time when nobody knew anything about, never really thought about this kind of thing, about digital documents, about electronics didn't exist, and the internet and so on certainly didn't exist. So you have a document that was born during the paper era, and there are doubts, of course, whether it can be digitized. The main reason there's a problem around this is because of another one of the key attributes of digital instruments, of negotiable instruments, sorry, and that is its negotiability. And that's what actually makes it a great tool for the finance, so the trade finance market, because not only can you embody a payment obligation within the instrument, but you can sell that very easily. And that's exactly what these non-bank investors are looking for. They're looking at something that looks very much like a bond, that's simple to understand, that's legally robust, but they want it in paper form, like Eurobonds and so on, because that makes settlement easier and it makes it easier for their systems. So what we have done in ITFA and in the DNI initiative is two things. Firstly, to create a digital or a solution for a digital instrument now, which we call the EPU, the Electronic Payment Undertaking. And that is essentially a form of wording that has the same effect as a negotiable instrument, the same legal effect, or same commercial effect, I should say, not the same legal effect, but the same commercial effect. But at the same time, to produce that in a form that is usable with blockchain, and not just blockchain, but other kinds of technology. So in ITFA, what we always try and do is not just come up with ideas, but with implementable solutions. So you'll see there the name in the last circle there of one of our partners, Inigio, that has actually produced a usable form of EPU, but there are also other users, and this is a universal technology. It's not tied to blockchain. It's not tied certainly to any particular vendor. So that's the what. Now the why, about why we have done this and what's in it for banks that are on here, is as I said, the enhanced security and certainty of enforceability. We want an instrument that can be created on a blockchain or another technology, but that has the same attributes, the same advantages of the paper-based documents. So the advantage for them, of course, is that this is precisely the kind of paper that the markets can produce. It's precisely the kind of paper that the investors want, and it's therefore going to, if we find that virtuous circle which this technology enables, there'll be an increased origination and business opportunity for the banks, and it's highly scalable. So there are already negotiable instruments, being used, not to the same degree as they were maybe 50 or 100 years ago, when essentially trade finance, world trade ran on the back of these kinds of documents, but they're still used, they're understood, and so they are very, very quickly, very quickly scalable. And that has advantages both for the ability to originate and the ability to actually, we don't put on this side, but the ability to distribute. We move on to the next slide, please, Andre. So I've said that that the main problems really are legal and not technical. There are a large number of technical solutions that are available, technological solutions. One of, and the EPU that I've mentioned is really our interim solution. What we need to do in order to reproduce the features and the benefits of a negotiable instrument, but they are not, legally speaking, negotiable instruments, and there'll always be that doubt about whether or not we could do something better. And in fact, we have tried to do better and are doing better. This is a letter which you might find a little bit hard to read, to me, from the Ministry of Justice, from Robert Buckland, who's the Minister for Justice, and this is a part of our lobbying efforts, part of our advocacy efforts, together with the ICC in the UK, to change the law. So the 1882 Act, the Bills of Exchange Act, has only been amended once, and that was to deal with clearing, automated clearing of checks. But it can be amended, we think, very easily. And the good news is that the government agrees with us, and that whilst we were hopeful of trying to get the legislation passed in the current parliamentary cycle, that hasn't proved possible. But what we have been promised by the Law Commission, with whom we're working, and with whom all changes of law, important changes of law, begin, is that we will be on an accelerated cycle next year. So by this time next year, I hope that and I have every confidence that the 1882 Act will have been amended to allow for proper digital negotiable instruments to deal with these issues around transferability and negotiability, and the existence of these documents in a paper form. So we are making very good progress, and whilst, as I say, we hope we would have done something this year, next year will be our moment, and that's really, I think, a great achievement. So in a year's time, hopefully we'll come back to you and say the law's changed. And what's important about changing the law in the UK, as has already been mentioned, is that UK law really is the model for laws, certainly in India and in many other Commonwealth countries. And actually, if we show that we can do it in the UK, that is a model for the rest of the Commonwealth. And I'm pretty confident that we'll find change happening very quickly across those very important trading nations that form the Commonwealth. With that, I'll pass back to Andre. Thank you very much.
Thank you, Sean. So this was on the Digital Negotiable Instruments Initiative. Moving on to the Trade Finance Distribution Initiative, the goal is here indeed to involve non-bank investors into trade finance and offering them access to trade exposures, whether those exposures are originated by banks or by new entrants, like new originators, or by platforms, SME focused platforms like threats, for instance, platforms you have in India. So often the challenge is not only to originate, but to find the right funding partners or risk takers like credit insurance. So all those flows in the secondary space also need to be digitized, automated, and this is what we are working on with the Trade Finance Distribution Initiative. Similar structure, I mean, we know that from a market trends point of view, Basel IV is impacting some banks heavily in terms of balance sheet capacity, risk-weighted assets. So the goal is to apply technology in order to automate the distribution processes. So TFD is not looking at origination. Origination is not impacted here. It's really about enabling banks to increase their SME funding, or platforms to increase SME funding by releasing capacity from the balance sheet and selling those to credit insurers and institutional investors, could be pension funds, family offices, and offer those non-bank players access to trade the trade asset class, which we know is very attractive for some of them, as per the ICC paper, and the ICC trade register has demonstrated since years. So definitely for banks, it's about a higher balance sheet velocity. So being able to use your balance sheet much more, and by sharing indeed those assets, sharing revenue with third-party funders, and therefore also increasing origination. We are also there working with multiple players in the industry, not only fintechs working together, but also banks and non-bank funders, creating a business community through TFD initiative in order to discuss bilateral deals. We know that ITFA has the right membership in terms of the distribution bankers. We want to attract those institutional investors, more credit insurers as well, to ITFA and to this initiative, so that when it comes to buying and selling assets between financial institutions, whether they are bank or non-bank, this is the working group, the business network that we can facilitate. You will hear more about TFD initiative from some of those banks you see here, as implementations are progressing very well. This initiative is backed by TradeTech, which is one of the ITFA members. TradeTech acting as the distribution hub in support of the originator, the seller to buyer, also originator to funder, originator to credit insurer, and that includes indeed the bank-to-bank distribution flows as well. Moving on, I'd like now to invite Achille to introduce us to the Terra initiative.
So thank you very much, Andre. And first of all, good afternoon to everybody, and thank you for participating to this webinar. You know, what actually Terra is, as you know, the name of our group states, it's technology experts for regulatory actions. When we have decided to constitute this group, you know, we wanted to address two main topics. First of all, how to facilitate you know, the digital transformation into trade at worldwide level. And the second point was how we can help banks and banking association to, you know, in their meeting with central banks and local governments, to address the main points that today prohibit an easy digital transformation into trade, and within a regulated and risk-controlled environment. So that was the main purpose of why Terra was constituted, and what you know, the reasons why we have you know, started this task. You know, therefore, as you can see, there is a complementary use of legal expertise, fintech expertise, banking expertise, and obviously, you know, this is to be considered as an instrument to facilitate the banks at addressing the issues that they are finding in moving from an analogic world into a digital world. During the first analysis that we have gone through to identify the different topics that we have to address, again, within the association by using Terra, and give, you know, the expertise to our bank associated, we have identified 5 different areas. One is electronic signature. The other one is digital negotiable instrument. Then the digital bills of lading. Obviously, the cloud-based trade document processing. And as we were mentioning before, the trade finance as a funding channel. Why that? Because we believe that technology is already existing, and in some cases, like electronic signature, laws at the local level regulate that particular matter. However, for some or for different reasons, these technologies are not applicable or are not applied to trade. Therefore, our intention is to help banks to talk to the regulators in order to address the issue and find a way to create a friendly environment for trade in order to move as quick as possible from analogic into the digital. Over to you, Andre.
Thank you, Achille. Indeed, this is possibly the most important track as part of the ITFA policy-focused initiatives, is to work with the banks and the regulators in order to evolve the policies according to the technology requirements. The good news is that it's not only trade that requires policy to evolve in support of cloud and DLT and more digitization. There are also many other industries, such as payments, securities, that are knocking on the door of regulators for the same reasons and referring to the same technologies. So I think there we will see very quick progress in various countries. With this, I'd like to hand over indeed to Mr. Shinvani to introduce our next panelists.
Thanks, Andre, and thanks, Sean and Achille, for taking us through the initiatives which are being taken up in various forums and the work which is being done by ITFA and Terra. And as you said it very right, Achille, there's no doubt about that everybody is agreeing big data to blockchain, that digital technologies hold immense transformative potential for the global trade finance industry, which till date remains largely paper-based. The only thing we have to see how we can make use of those technologies, those expertise, and how we can adopt that in our traditional businesses, which are so far being working on the paper-based. As Sean also mentioned, that something which we have been doing for the last hundreds of years, we find it difficult to transform that into totally digital format. And yes, these kind of collaborative efforts will always help us move in the right direction. Coming to India, we are happy to say that with total support from the regulators, Government of India, we have been working in the right direction, and a lot of work has already been done in the last few years. And some of the things which we have done in the Indian market, starting with which maybe some of the things may sound quite local to you, like EBRC, IDPMS, CDPMS, all 9 systems for processing all the imports, exports, transactions, be like electronic bill of entry, and also the electronic signatures that's already existing in India. And we have also got in the last few years introduced that uniform tax across entire country, GST, which has opened the ways for so many other electronic or digital initiatives like e-way bill, e-invoicing, e-stamping, e-guarantees, etc. So a lot of work has happened over here already, and a lot more is there in the pipeline. We are working in the right direction, and government is very keen, government as well as the regulators are very keen to take it forward. And already efforts are on use pilot projects, etc., using blockchain platforms to improve the overall operational efficiency. And also right now in today's environment, to address the challenges created by the global pandemic, that this has only accelerated the entire process. To share with us some of these developments, some of the efforts, work which has been done, I would like to now invite Mr. Venkat Nageshwar, Deputy Managing Director, State Bank of India, currently heading the International Banking Group of the SBI. And SBI, as you know, is the leading premier institution of the country. And IBG handles the international operations of the bank, which are spread across 210 offices in 36 countries. with a balanced business portfolio of more than $60 billion. And Mr. Venkat has been there with the bank for now, easy for me to calculate and mention, almost 30 years he's been working with the bank, because besides being a colleague, a guide, a overall leading light for me, he also happens to be a friend. So that's why I can take some liberties with him maybe. Mr. Venkat is also a director on the board of banks with overseas subsidiaries and has been a part of various committees instituted by RBI, SEBI, and the latest one being the Sunil Mehta Committee on Resolution of Stressed Assets, which has been the key legislative change in the Indian banking industry, which has happened in the last few years. So I'll now like to invite Mr. Venkat to share with us his views and also share with us some of the effort development work which has been going on, where he has been closely associated with various government entities, including IBA and the Ministry of Commerce and Industry. I thank you, Mr. Venkat, for joining us, and over to you. Yeah, eager to hear from you.
Thank you, Ashwini. Thank you for that introduction. Thanks to ITFA and to FEDAI for giving me this opportunity to interact with all of you. As Ashwini said, one of the advantages that I have with Ashwini is both of us have started our careers together, and we have together put in 72 years of service. That is 36 Ashwini and 36 my service. So in 36 years of service, at least I have not seen, we have seen many crises, but this is for the first time that we have seen a health crisis which is manifested into an economic crisis. And today, and I consider this as the blackest of the black swan events. But not everything is going bad, because when I look back into all these crises the world has gone through, what we observed is that there are big reforms in the history in the world were triggered by large crises. Every time a crisis has occurred, and then you find that a good number of reforms happen. And one of the other things that we also find is that the decisions that are taken, which were pending for years and years, happen during this crisis period in just within, if not in days, at least in months. One of the simplest examples is the SME definition, which we were, and in fact, when I was talking about right from last 30 years, we were debating as to how to define the SME sector. But within no time after the crisis happened, within months, the SME definition has been changed in India. So there's so many things keep changing because of the crisis. And one important thing is digitalization, that which we are talking about today. We have seen the way in which the COVID-19 has caused massive disruptions globally in the movement of goods and documents. And one of the things that we observed, right, the first thing that struck us, because we were spread across in 36 countries, and the goods moved, but then there were challenges because my Singapore office called me and told me that the customer had submitted the documents, but we are not in a position to transmit it to India because the couriers are not there. I mean, these are small things which we never thought that is going to happen. And they said that we are unable to, if I discount the money and give the money to the customer, I don't know when I can send the documents to India. Because the couriers, if they start in Singapore, they may not come to India, because in India this entire lockdown happened. So these things which were never ever thought of, we never thought that is going to disrupt the world, has happened. And that is one positive thing out of all these disruptions, is that we're going to come out with good reforms. I'm very pleased to hear from both from Andre, from Sean Edwards, about the way in which things are moving. In that direction, let me tell what State Bank of India, the leading bank in the country, the bank which is a public sector bank, which has got a market share of more than 22% in deposits and advances, and with a population, with a customers of more than 440 million customers. And we have, which is much more than the population of Europe, Mr. Andre. And we have the transactions happening across the globe. So what we did was, we went into the digitalization front, and more than 91% of our transactions in State Bank of India are digitalized. In the process, in the digitalization of the trade, we have done many things. One is the most important thing. The first thing that we have done was we have consulted the ICC and we said, can we do the digitalization risk mitigated process? Send the scanned documents. It was a short temporary solution that we provided to our customers. We said that we'll send the scanned documents, send a swift confirmation saying that they are in order, give the indemnity to the shipper here, and get the shipment released. So we did temporarily, we provided a solution to that. But going forward, what we started doing is we started using our YONO platform. There's one platform that we started off for retail customers, what we call as You Only Need One, where entire banking and retail is being provided through the mobile platform. The same platform we have started introduced it for our business customers, and we also started enabling it for our trade customers, trade transactions also. We are we're working with the SWIFT on various digitalization initiatives like e-stamping and e-invoicing, which Ashwini was talking about. We are also engaged with various stakeholders in exploring using of blockchain in trade and payment systems. We are engaging with the fintechs like Bolero and Marco Polo for blockchain networks, including digital platform and suiting for our requirements. And as Ashwini was talking about, one of the things that we are doing is we are constantly engaging with the regulators. We are engaging with the Commerce Ministry. In fact, I was one of the members of a sectoral committee that has been formed to ensure that smooth movement of the exports between exports of India. So in that committee, I was a member, and we discussed about various steps that are required to be taken. And I'm very happy to state that the EDO, the delivery order, has been mandated by a circular issued by Ministry of Shipping, and the same has been implemented in various forms of the trade. This is actually a remote DO printing facility and reduces the physical movement of paper to a certain extent. In fact, as per the new guidelines, a digital copy of shipping bill bearing the final LEO would be electronically transmitted to the exporter, and present practice of printing copies of the said documents for the exporters and for maintaining a docket of customs house has been discontinued. This is with effect from 22nd of June 2020. This has been introduced. EBL is also prevalent in India, but certain carriers have given a facility to remotely print the bill of lading to their large customers. This reduces the physical movement of paper to a limited extent and is loosely referred to as EBL. But there are a lot of other measures that are required to be done. And like Ashwini talked about, a small measure or reconciliation of EDPMS and IDPMS has been introduced. Earlier, when we were transacting, as we used to submit physical documents to Reserve Bank of India. Now, the entire reconciliation, the monitoring process has been digitalized through the EDPMS and IDPMS process. But then we do have certain challenges that are coming up. One is the IT infrastructure, where various stakeholders are at different stages of IT curve. The banks are at a different stage. The other intermediaries are at various different stages. In fact, one of the steps that we talked about with the regulator, when the EDPMS and IDPMS has been introduced, we said that why don't we move towards the blockchain technology so that automatically the owners of responsibility of inputting the data by the bank about the receipt of the payments can be minimized. And then we requested the Reserve Bank of India to move to the blockchain technology. But since all the stakeholders are in a different stages, RBI said that will take some more time to introduce this blockchain technology for reconciliation of EDPMS and IDPMS. The interconnectivity and interoperability is another of sharing of uploaded documents is another challenge that we are facing at the moment. There's a market practice of various documents to be submitted physically. And one of the points that we talked about is the negotiable instruments. Even there, it's in a different stages now. If the stamping of documents is something which is very important. E-stamping has been introduced in some of the states, particularly in Delhi, it has been introduced, but in other states, it is yet to be implemented. And of course, there is a huge knowledge gap leading to resistance towards digitalization. The government is pushing, government is supporting for this digitalization and is engaging with various stakeholders, as I mentioned. We are one of the constant banks which keep engaging with the Commerce Ministry to push towards digitalization. There is a national logistic portal, which my colleague will be talking about and explain how the things are being shaping up. So in the one thing that I strongly believe, in the midst of every crisis lie a great opportunity. And I'm sure that this COVID-19 crisis, the comeback is likely to be stronger with this digital process. I'm sure my colleagues who are going to talk later will talk about the way in which the banks and the intermediaries are moving, and so that there will be paperless trade transactions that would be happening, and we'll be too happy to be a part of it. And once again, thank you very much for giving me this opportunity to both to the FEDAI and to ITFA, and I'm sure it's going to be a great initiative. And I said in the beginning, the crisis would result in good reforms, and this is one of the best reforms that's going to happen, and we'll be too happy to be a part of it. Thank you very much.
Thank you very much, Mr. Shalazani, for your insights and encouragement. Indeed, we still have a long way to go, but it's definitely the right time to accelerate those changes. Mr. Shinvani, do you want to introduce our next panel?
Sure, my pleasure. Thanks, Andre. I'm feeling proud, very happy to introduce the next two panelists who are going to take us through what is happening in the Indian market. Two of the leading practitioners from the market, starting with Nandini Bhattacharya, who is head of trade products in ICICI Bank. Nandini is a business school graduate with several qualifications in banking and international trade. She is a seasoned banker with over 25 years of experience and currently responsible for trade products at ICICI Bank Limited. Before joining ICICI Bank, she has worked in Reserve Bank of India, American Express Bank, and also had some overseas stints. She has also been an executive committee member of ICC India and other industry bodies for several years. And she's, I can say, but just in the banking world or in the trade finance, she is considered to be an authority and to go-to person if you have any doubt about anything to do with that trade finance related issues. So welcome, Nandini, and thanks for joining us today for this discussion. And thereafter, the last but not the least, we have got Mr. Ajay Kumar Sinha, General Manager at International Banking Group of State Bank of India. He's worked in Treasury as well as international banking, both in India and abroad, including a position he had in London as well. And he's also a director on the board of Nepal State Bank Limited, which is an overseas subsidiary of State Bank of India. And he's been as part of Mr. Venkat's team and working in the IBG, has been closely engaged with all the trade digitization initiatives in SBI, including the collaboration or the work which they have been having with Ministry of Commerce and Reserve Bank of India. And I'm sure Rajay will be in a position to throw some more light and share some more details on that, about all those initiatives with us. Welcome, Rajay. And I'm also more than eager, like anybody else, to listen to your views and what you had to share with us today. Looking forward to it. Over to you, Andre.
Thank you, Mr. Shinvani. Let's indeed hear from Mr. Shina around the Indian trade market and its challenges. Let's see if you are unmuted. I think you have to unmute yourself. Yes, very good.
Yeah.
Now we
Is
can
it
hear.
okay now?
Yes.
Is it okay now?
It is.
Okay, thank you. I'll build upon what Mr. Venkat, our DMD, has already spoken about, and it's about the Indian context of digitization in trade. I'll start with the SBI's efforts in trade digitization before I move to Indian scenario and what exactly we want to achieve going forward. The main challenge that we face in India right now is while digitization is happening in bits and pieces, but customers are still not a part of it. So as in an initiative to include the customers and to provide them an integrated, at least at SBI level, integrated platform, we have launched YONO for corporates, where the entire trade finance journey will be digitized. We have already digitized import component of it, LC issuance, etc. But we are very soon going to digitize export and inland BG, etc. Also, there are some challenges, and we are waiting for other pieces to fall in place. But so far as SBI is concerned, we are committed to completely digitize the trade finance operation. If a foreign exchange component has already been digitized, so is cash management, and we are going to move to supply chain financing also very soon. What actually we are doing, we have started doing recently, is started using digital platforms or fintechs for supply chain finance, especially at our foreign offices. Having said that, we are an active participant of trades in India also. We have initiated the process that will lead to complete digitization of trade processing in SBI. We are engaging with, as Mr. Venkat mentioned, various stakeholders like government, FEDAI, IBA in their efforts for trade digitization. We are an active participant in those dialogues. We are a member of blockchain infrastructure company in India that has its objective, to drive digitization initiative in the country. We are in discussion with various fintechs for blockchain networks, including digital platform. We are working with SWIFT, as Mr. Sindhwani also mentioned, on e-stamping and e-invoicing. Stamping, of course, is a major issue in Indian context that will come, when we discuss Indian scenario. And we are engaged with other stakeholders in exploring use of blockchain in trade and payment and settlement. We are working with a couple of banks, etc., on a pilot project basis. We'll move to the existing status of trade digitization in India. It's very interesting, actually, when I was listening to Mr. Edwards, Mr. Akile, and Mr. Antonio also. The challenges that we are facing in India to some extent, to a great extent, are the same that we face, across the globe. This current status of trade digitization in India is essentially a whole lot of things are being digitized, but on standalone basis. Part of it is digitized, but not integrated. Part of it is digitized, not at all digitized, and the rest, are digitized, available in digital format, but market is not accepting it for various reasons. So what is digitized and to a large extent integrated are, for example, bill of entry, shipping bill, payment advices, etc. IPS port community system, Indian Port Authority's port community system has digitized e-invoice, e-payment, and e-delivery order for cargo. However, interconnectivity remains an issue. For example, bill of entry and shipping bill, customs are there, port authorities are there, RBI and DGT and banks are there, but end-to-end it's still not there. Some of the things that have been digitized but not integrated at all are, e-way bill and what we call invoicing, etc. Earlier, physical invoicing was compulsory, 3 copies, 1 original, 2 duplicate, or whatever. Now it is available in digital form, but integration is similarly transport documents, etc., carrier permit, fitness certificates. These are all available in digitized format, but integration is a challenge. And third comes the instruments where either there are issues with legal validity or market practice. So bill of lading is a separate issue in Indian context completely, as it is, I guess everywhere else. bill of exchange in India, for example, if I understand correctly, it still needs a wet signature, certificate of origin, and other documents, so many other documents, which are even today being, submitted in physical form. Challenges, next slide discusses challenges in end-to-end digitization in Indian context, but you will find that many of these things are applicable, globally also. As Mr. Venkat mentioned, various stakeholders are at different stages on the IT curve. So everyone has to have some minimum IT infrastructure, and this infrastructure needs to be, technology agnostic. For example, we believe that, say, in case of bill of lading, blockchain may provide a better solution. So the technology that stakeholders need to adopt has to be, technology agnostic. I mean, and they all must achieve a minimum level of IT infrastructure if we want the benefits of digitization to accrue to everyone. Interconnectivity, I have also already mentioned, is a problem, but more than that, interoperability is a problem. Even if we interconnect the things, if these are not interoperable, why should a customer go to Bolero for one thing and TradeStream for other, and for rest come to SBI? It should be, taken care of. But interoperability or even interconnectivity is not possible unless and until documents are standardized. Documentary information need to flow in a standard way if we want interoperability or interconnectivity. We believe that bill of lading and digital signature, etc., can be taken care of if we have a centralized entity to facilitate standardization and harmonization of various aspects. For example, who is owning the goods at any given point in time, so far as bill of lading is concerned, authentication of ownership, authentication of digital signature, these things are possible only when we have a centralized entity. Then market practice. Market needs to be incentivized, motivated. I mean, Government of India made it mandatory to go for EDO, or they are now asking us to accept the digital format scanned copy of shipping bill if necessary. So we need to ensure that local regulations motivate, incentivizes digitization. Legal and regulatory issues are major challenge. Bill of lading, legal acceptability of EBLs is still an issue. India accepts digital documents, except negotiable instruments, I guess. But we need to authenticate the signature using a certificate that is accepted to Indian listing. So this is a major problem. Then many countries, we believe that EBLs are still not acceptable. So every time a customer has to find out whether EBL is acceptable in that jurisdiction or not. This is one area where global cooperation is needed. Stamp duty issue is a major problem, and it's very peculiar to India, maybe some other countries. So a whole lot of instruments need to be stamped, and we are working on it with the SWIFT India and other market participants. We hope that we would sort it out, but stamp duty issue needs to be addressed, in its entirety. And then data security issue is a major issue in today's world. What exactly we have to do? Suppose we are, going for digitization. I believe that some sort of regulatory equivalence is needed so far as data privacy laws are concerned. This again requires a global coordination. Mr. Venkat mentioned in the next slide, we'll discuss the enablers that government and regulatory bodies are providing. They are already working with the industry very closely, and there is an urgency in the post-COVID era. So as we said, the reconciliation of shipping bill and bill of entry, etc., is completely digitized, except for the fact that there is no central repository where it may be available to other stakeholders also. However, people who are directly involved with reconciliation, they have access to it. IPS port community system is trying to digitize invoicing, payment, and delivery order to printouts of shipping bills are done away with. EDOs are in place, as Mr. Venkat mentioned. Customs Department has an e-Sanchit portal, that is e-storage and computerized handling of documents for online documents filing by iSkate users. Similarly, government is trying to get have been already discussing with the various stakeholders to replace the present Transportation of Goods Act and the National Logistics Law. That will define various participants, define role and responsibilities. We believe that this act will reduce compliance cost, avoid overlap, define roles and responsibilities, and improve transparency in the system. And in that sense, it will help all the stakeholders. And one of the most important initiatives that government has at least declared its intention towards is a national logistics portal. We are fully in support with the government on this step. National logistics portal is sort of central entity, central repository, and which actually will help all the stakeholders. We have given a chart what exactly we expect from it, and this is what we have recommended to government also. So this NLP will be linked to banks, Reserve Bank of India, Director General of Foreign Trade, Vahan, that is Transport Ministry website, GSTN, Indian Port Authority, iState, etc. Similarly, it can be connected shipping agencies, freight forwarders, banks, financial institutions, and customers through the banks and financial institutions. And last part is logistics certification platform, where we can actually find the ownership of bill of lading or signature authentication, etc. And I'll conclude by sharing our thoughts on what we think are needed for effective trade digitization in India. As I mentioned already, minimum technological preparedness is required for digitization amongst everyone. Suitable technology needs to be built in by all the stakeholders. As I said, if blockchain is needed for EBL or blockchain is needed for trade finance platforms, then the stakeholders should enable it. If digital signature is required, then trade platforms should ensure that digital signature for bill of lading is taken care of. Right now, for example, if I want, I understand Bolero does not support digital signature at all. So these are some of the issues that we are facing. Second issue is, of course, cross-border cooperation. We believe that UN level negotiations are going on. As soon as these are formulated, governments should adopt them. This will ensure that there is no regulatory arbitrage or regulatory or legal restrictions in individual jurisdictions. And this, I believe, will be the game changer for digitization, because it will support at least digitization of EBL, if not anything else. And conducive local laws for accepting digital bill of lading, bill of exchange, whether it's a question of stamp duty in India or digital signature versus wet signature, etc. Unified agency, as we mentioned, we are supporting the idea of NLP. It will be a super, platform that will connect all the stakeholders. If we can come up with that, that will be a major facilitator. Standardization of trade finance documents wherever possible. I believe that ITFA is taking initiative, and along with ICC and other industry bodies, we'll be looking up to them to coordinate actions in this field of standardization of and harmonization of trade documents, etc. Because interconnectivity and interoperability are the key to trade digitization. Coordination among all stakeholders need to be done. Again, ITFA has a role to play, I believe, here. And FEDAI, of course. I'm sorry, Silvani Saab, FEDAI has a role to play, especially in Indian context, in all these. And we believe that end-to-end utilization, last one is the more like a wish list. We would like to have a system where customers and other stakeholders can, use API on plug-in and play model. So that is all from our side. Thanks a lot for giving us the opportunity to share our views on trade digitization in India with you. Thanks a lot.
Thank you very much, Mr. Sinha. Definitely, we shared a common vision, and you have an impressive plan there with the NLP. We want now to move on to Mrs. Nandini. And for that purpose, I will ask Mr. Shilvani to introduce while I upload the right presentation.
Thanks, Andre. And as I mentioned earlier, I don't think Nandini, who has been working in this market for the last 25 years, needs any formal introduction. She has been one of the key persons, at least in various forums. I have heard about that any issue, any problem, the go-to person, talk to her. And she is currently heading the trade products at ICICI Bank, a business graduate, having worked in before ICICI in American Express as well as in Reserve Bank of India and in India as well as in the overseas market. So I won't say much about that. Maybe, Nandini, I'm as eager to hear from you and see what you have to say, what are the developments and how the fintech is coordinating and collaborating in this area. Initially, we all bankers used to look at fintech as a competition, but now we have realized it's not a competition, it's better a collaborator. And to be successful in this area, we have to work together, and fintech has got a great role to play. So over to you, Nandini.
Thank you, Mr. Sindwani. I would request everybody's indulgence. I will need to stop video due to data line issues. To ensure there's connectivity continuity. So thank you, Mr. Sindwani, and thank you all other speakers who've spoken before me. I hope I can do justice to the slot. I would like to take a few minutes to explain the trends that we see in the B2B digital space, because finally trade finance is all about the B2B digital space. The first trend that we see is the expanding digital infrastructure in the Indian economy. Digitization in both domestic trade and commerce, GST, various upgrades like e-way bill, cross-border trade in EDPMS, IDPMS, creation of a single digital platform infrastructure through NPCI. I think Mr. Sinha has spoken about these. The second trend in the B2B space is about increased technological adoption. So far, the core digital sectors were considered to be IT and ITES. Now we see that the new digital friendly sectors such as financial services, agriculture, logistics coming up. Mr. Sinha spoke about the NLP. Thirdly, an important outcome of the above two trends is the creation of an unprecedented data explosion. That in itself creates a lot of value for all stakeholders, including bankers. These structural changes have led to a rise of fintechs. Fintechs armed with innovative business model, nimble organization structures are playing a key role in shaping the industry trends, especially in the trade finance space. What we have seen in this COVID-19 pandemic is that it has fast-tracked the trade digitization initiatives. The digital transformation that we have invested in earlier, we have seen a progress in this short time frame, which we would not have anticipated perhaps this time last year. In Asia, for example, digital services exports for Japan notched up a year-on-year increase of 80% in the Jan to April period. Many firms, including global banks and tech startups, have been investing heavily in development of tools. Emergent technologies, including API, RPA, AI, blockchain, etc. So from Comgo, gaining momentum, to SDocs, Liquidex, a new marketplace for trade credit insurance, to matchmaking via Trade Club Alliance, developments are galore. Disruption in the B2B digital space has been led by platforms, ecosystems, and partnerships. When these platforms will integrate, ecosystems get created. And then when ecosystems integrate, the connected enterprises happen. This is getting done on a foundation of blockchain and APIs. Blockchain or DLT enables secure and trusted sharing of validated data amongst participants in real time. This is not anything new to this audience, and I will not explain details of blockchain here. We know Voltron has done several transactions in letter of credit space. Marco Polo is another platform that is coming up, focusing on open accounts. Banks have started to conduct live commercial transactions on the WeTrade blockchain. WeTrade, you know, is powered by Hyperledger Fabric and built by IBM. It is trying to digitalize the whole process from order creation to payment execution. Despite this explosive growth in platforms coming up, the transactions on them still represent a very, very small fraction of the global trade finance business. One major hurdle that we see, and Mr. Sinha spoke about, is that a typical trade transaction involves multiple parties, including importer, exporter, buyers, and one or more shipping companies. To conduct a transaction, perhaps through a blockchain platform, all parties need to understand and have access to the tool. For smaller companies, learning and managing a new system is cost intensive, and some of them are really not willing to commit the necessary time and resources. Also, when there are, competing platforms, you have a client on WeTrade, you have another client or a counterparty on Marco Polo, and there are no standardized processes and procedures in the industry yet. So if an SME learns to use one platform and their new counterparty wishes to use another platform, it is perhaps easier for them to fall back upon paper-based trade. Retrograde, but that is the reality. The result is that usage of these new platforms is been really slower than many had hoped. Many years ago, we had BPO with all the hype around it that has now got scrapped almost. So banks and fintech companies, I think, are yet to see their investments in technology pay off. This is still investment period and wait period. But it's a fact that COVID has expedited this business of digitization to become faster, simpler, and quicker. The need of the hour in blockchain is interoperability, linking up blockchains. So FinTech Quant Network has launched what it calls a network of networks to solve the problem of interoperability across blockchain platforms for trade finance. This will be a virtual blockchain that links existing blockchains and allow developers to build multi-chain applications. So like in all areas of life, people and banks and customers have realized that if we have to work together, teamwork is what is required for interoperability at scale. In ICICI Bank, Trade Chain platform is our blockchain platform. We have close to 500 clients onboarded. Being a foundational technology, I can say that we have moved from the phase of proof of concept to a phase of commercialization. I think this will be followed by a phase of rapid adoption in the next couple of years. And thereafter, it is expected to become industry standards by 2025. With interoperability in mind, we have also partnered with leading banks in the country, like SBI and other banks, in forming the Blockchain Corporation, which is the BIC, a separate company formed in collaboration with 14 banks in India to define the rules of trade finance on blockchain. This will work on the domestic trade to start with because it will not have the FEMA and the regulatory complications. I think this consortium is extremely well positioned to capture this opportunity. Over the next few years, the value creation journey will continue to be built on 4 basic tenets: creation of platforms, building ecosystems, forging partnerships, and connected enterprise. All these foundational steps are anyway built on data analytics with the customer at the core, and the agile organization setup will be key to success. Now, fintech companies have always been and will continue to be important innovators in the trade space. With very high expectations and perhaps a little low level of patience, we are watching the continued acceleration of digitization and project delivery. Pressure is mounting on fintechs as well as the banks who are partnering with them to test the claims of the vision and the trade digitization journey. These are being increasingly put to test. So if we had a foundational concept discussion on blockchain 3 years ago, today the questions are not about what are the efficacies of blockchain, what are the plus points. People are asking questions: how many customers, how much of trade flows are you seeing in your platform? So those are the questions getting reviewed in boardrooms and elsewhere. So I think over time, this in the next couple of years will really need to break the hurdles of interoperability, hurdles of getting a uniform rules in place within the country and perhaps cross-border. And then the investment, as the investment in this pays off, you will have more and more enterprises and connected, which are connected to these platforms to yield the necessary results. So I think foundational technologies are here to stay. Swift has been traditionally a partner to every bank. That is also working with their innovation lab to see what they can do in terms of blockchain, how they can integrate with, say, for example, in India, in terms of the e-way bill validation, etc. So finally, I think the end state would be a complete solar system with the customer at the center, like the sun, and every other enterprise, be it a bank, an FI, a fintech, or customers or logistic partners, etc., insurance agencies, all rotating around the customer in terms of a solar system. Thank you.
Thank you very much indeed, Mr. Nandini. Very indeed promising avenue here also for more collaboration with technology companies and blockchain for sure. With this, indeed, as you highlighted, the partnership with fintechs look like the next big thing. I'd like to invite Sam Segal, which is CEO of TradeStream, and it's one of the fintech members of ITFA. We have 32 in total, but one that is definitely looking at digitization from a back office point of view and looking at pragmatically digitize trade documentation processes. So Sam is also part of the Terra initiative and has been instrumental in setting up this task force, because indeed, thanks to his background as a banker with more than a decade at Citibank leading trade for EMEA, Sam knows very well how important it is to align regulatory innovations with technology innovations. So with this, I'd like to invite Sam to tell us more about how trade digitization can be achieved using TradeStream.
Thank you. Thank you. Andrew, can you hear me?
Yes, I can hear you well.
Wonderful. Good afternoon, everybody. And I realize I stand between a lot of people and their lunches, so I'll try to keep it very, very short. Thank you so much for making time available on a Saturday morning. A lot of what's been put up on this first slide is, has already been spoken by my illustrious predecessors on the panel. There is a lot of paper in the trade system. It's always been there. Trade is very, very visible. It's very in the face as far as the protagonists are concerned. It's very analog. It's very paper-based. It's very manual. It's very cumbersome. It's also leading to a lot of duplication of work between the buyer, the seller, the seller's bank, the buyer's bank. There's a lot of duplication that happens that I don't need to repeat here. And this process obviously is not fit for purpose for the day and age that we're living in. A lot of banks that we deal with and we talk to around the world talk about retiring workforce. They talk about the fact that the knowledge has not been institutionalized, and that trade, as one person retires and moves out, basically goes along, the knowledge goes along with them. The problems are not just in banks, it's in corporates as well, because they are the originators of the documents. So the clients that we talked about, they basically are the source of the documents. They are the ones who basically create the documents, and therefore they face the pain before it comes to the banks. And this just manifests in the system over and over again. Not surprisingly, therefore, when you look at the ICC and DCG and the surveys, the one overarching view, the one overarching feedback that's come back is that there are lots of pain points that need to be eased. Digital trade ecosystem needs to be formed. Automating of trade, digital trade needs to be done. There is a reduction of manual effort that they are looking for, and increased connectivity. At some stage, I think there was a survey that was conducted a few years ago, which showed that trade end-to-end was less than 3% digitized. So you can imagine the amount that needs to be done to be able to make it much, much faster. I mean, there are instances where ships reach from port A to port B in 4 days, but documents take between the various parties because they're being checked, discrepancies are being detected, could take anywhere between 8 to 10 to 12 days, leading to demurrage. So obviously, this is not a process that, probably it could have done in the 19th century, but not in the 21st century. So what do we do and how do we proceed from here? So if you look at the next slide, what we at TradeStream, and this is the genesis of TradeStream, the idea was to look at the technologies that are available today and to be able to bring them into the trade world and to actually rethink the entire trade world, the entire trade process. Does it really need to be? What we're doing at the moment, when we talk about various instruments, various documents, this is a process which was fit for purpose probably 50, 60, 70 years ago. But with the technologies that are available today, which we use in our daily life, I mean, we use such amazing technologies like the hand phone and the smartphone and all the other things that are there, but that's not been brought into technology, into trade. So the idea was to be able to rethink the entire process and see if you could do it differently. So at the base of trade stream is basically 3 different fundamental steps. And they are fundamental to the extent that they do something which is remarkably important for the process. The first one is the digitization of the process. So when you look at documents and you digitize them, that's what humans do. When you look at a document, you use your eyes to be able to make sure that you digitize it and take it. That cognizance process, that digitization process, is what we use OCRs for, optical character readers. So pretty much taking a seat for documents and just running it through a scanner. And that scanner then basically picks up through the platform all the information that's there in the documents. And you can imagine, and I think Mr. Sinha mentioned about it, the non-standardization of documents. So in a bill of lading, the document data is very, very different from what it's in an invoice, in a packing list, etc. But the ability of the system to more automatically understand that this is a bill of lading, this is an insurance certificate, and be able to then spatially orient itself to be able to imagine where the data needs to be picked up from, and then importantly, picking it up very, very accurately, pinpointed accuracy, because you can't afford a single data element to be missed. You can't afford for a single data element to be wrongly picked up. That's what the digitization engine does within our platform. And it's been a journey for us as we have slowly and gradually built it up from 50% accuracy to 60% to 70%. There's a lot of thought process that's gone into it, subject matter expertise that's gone into it. It's bills of lading, not balls of lading or bulls of lading. That sort of knowledge that goes into the platform basically ensures that what you pick up from the digitization engine is very, very pinpointed. Now, once you've got that data with you, you're in a happy place, because you can run all the checks that sit in somebody's head. You can run all the checks that regulators require you to conduct. You can run all the checks that an institution requires you to conduct, because those are a process that you can code those checks, you can actually run those checks, and you can make sure in a matter of seconds, you can actually identify what are the discrepancies in the documents. So for example, at this stage, you've got probably about close to 300,000 different algorithms which run in the background and make sure that the document is checked against the other, the relevance of the data to the field, the importance of the UCP rules, the ISBP rules, etc. All of those checks get conducted in probably between 40, 45, 60 seconds, and you get your feedback as to whether the document is discrepant or not. And while it's doing that, it keeps on evolving from time to time, and we often joke that it's almost like a smart kid who, once it's taught something, never forgets and keeps on improving and improving and improving. It also does not suffer moods, and therefore it's not as if on Monday its performance is good, on Tuesday it's bad. It basically keeps on improving with time. While it's doing this, and while the checking process is going on, what we do is we take out information out of the underlying documents. And as Nandini mentioned, it's not just about the trade checking process. For the user, it's about the ecosystem and the ability to be able to go and discern from a compliance point of view, from a logistics point of view, from all the other elements that the user wants to be able to operate, to be able to take the data, give it to those third-party sources, world-leading institutions, and get that information back in the time that the document is being checked. So what you get end-to-end is basically between digitization and the rules, the checking process, and the ability to interoperate and give data and take feedback from other platforms. You basically give the user the rich experience of not just checking, but all the other manifested information that he needs to be able to take a decision. So if you look at the way the platform is going, we basically want to be, and we were in the middle of discussions and implementations and mandates with lots of customers around the world. What we're looking at doing is basically being able to take this platform and give it to the banks, because banks as aggregators is where the pain point is. That's where the checking process is non-standardized, where institutionalized knowledge has not happened, etc., etc. But more importantly, also give it to the corporates. Because if you give it to the corporates who the source of the documents, then they can check within their own offices if the documents are clean before they give it to the bank, and therefore reduce the pain point for the bank. And if there was a seamless way, whether it be blockchain or otherwise, in which the corporate can share the documents or the data that's been taken out of the documents to the bank, then you got an end-to-end highway, information highway, in which data is being gleaned by the corporate first, checked, shared with the bank takes the decision, and therefore is able to share information or decision-making in real time. That's the end state that we're getting to. I think Mr. Sinha also mentioned about APIs. I think that's a very, very, very important part of the journey, because with APIs, as Andre is showing on the screen, you can actually connect with multiple parties around the world. And to the analogy that was drawn from a solar system, that's exactly the way that we are looking at the platform to go, where the client or the corporate or the bank sits in the middle. And the TradeStream platform basically gives and takes to an API. So we do not intend that the users of the platform to actually come onto the platform. If they are using a certain platform, a backend trade platform, or a market platform, or even things like SAP, Oracle, etc., they continue to stay on their platform. And what TradeStream does is basically sits like a thin skin, which gives and takes information from the client's platform and automates those steps that are today manual, thereby giving the information back to the platform for the user to continue his journey. And we've seen remarkable differences. What was taking probably days, 6 days, 7 days, we've seen it being reduced down to 20 minutes, 15 minutes. And our aim is to be able to take it down to 5 minutes, so that you can actually process and give that information back to the client in the matter of minutes in their checking process. The overall architecture is then built in the form of an interoperable system which connects with third-party systems, whether it be compliance, whether it be third-party platforms, whether it be insurance. I mean, why would one stop? If you basically got the data, and while you're processing the transaction, and if you wanted to defease the transaction, if you wanted to distribute the risk, and you wanted to get insurance on, you can actually send the information in real time to an insurance broker or an agency for them to come back to you and tell you that, look, this is the quote that I would charge you if you were to look at defeasing this transaction. So insurance basically comes along. So does logistics. So you could pretty much, and we show it on the platform, we actually go give and take information to Lloyd Shipping or other third-party providers, which are transponders. And they basically tell you in the journey where the ship is, where the plane is, where the goods are. They tell you exactly where it is. Now we're trying to connect with DHL so that you can actually get to see even where your documents are in flight between different banks. So the overarching view, the view that we are working towards, is to be able to create an ecosystem which is medium agnostic. You come in with paper, perfectly fine. If you come in with Swift, the platform is Swift compatible, you can operate off Swift. If you come in with a digital platform, you can take information digitally as well. So medium agnostic, interoperable, which works with various platforms, whether it be blockchain or otherwise. It's able to be able to give and take information to third-party platforms. And therefore, the way it's headed, we see, and it's very fascinating because we're seeing the journey change in front of our eyes. We're seeing the entire ecosystem change in front of our eyes. We're seeing trade as a business that we've seen for the last 25, 30, 35 years change in front of us. What we're seeing is an interoperable world where the client is sitting in between, and almost like, if I were to draw an analogy like a TV channel, when you go and take your channels, you basically take a bouquet of channels. I want sport, I don't want news, I want this, don't want that. The same is true about the client. So if you basically get an entry into an ecosystem where you can get to choose that I want this compliance provider, I want Bolero, I don't want this, I want this, I don't want the other one. You can actually choose the 8 or 9 or 10 or 15 or whatever, hundreds of options that you want. And you basically sit at the center as a client, benefiting from and getting the connectivity into these users through the platform. So that's the way we are building our TradeStream. We are happy to share with you that the progress has been very, 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 very strong. And at this stage, we're probably in discussion. We're probably about 80 to 90 very large institutions around the world and in implementation mode with them. So stay tuned. We'll obviously keep you posted as we progress, but it's a really, really fascinating moment. And clearly because of COVID, as has been said by the panelists before, the entire progress has been really catalyzed by the need that the customers and banks have all over the world. Thank you so much, Andre. That's it from me.
Thank you, Sam. I mean, TradeStream is an excellent example of how fintechs enable you to benefit from new technology without changing what is working. Sam said it, if you want to continue working with paper because your clients need that, if you want to continue working with the 700 and T700 from Swift, of course, that is there to stay as well. Or if you want to emerge on the blockchain, that is compatible as well. So the nice thing about many of those fintechs we facilitated ITFA is that they are not trying to change what is working. They add value on particular pain points. And because they are so specialized, through those initiatives like the D&I initiative, we get them to work together. So this is an example of a back office enhanced with the D&I initiative, where TradeStream, as Sam suggested, whether it's on-premise or cloud, doesn't matter here, is adding the document compliance and processing capabilities. So making sure the document is checked faster and fully digital, even if it's coming in on a paper basis. So it's a bit like putting Google glasses on your doc checkers. But at the same time, if you, at the same time you want to digitize a guarantee, digitize a bill of exchange, or other types of documents that are key to you as a bank, Enigio, which is our document technology partner for the D&I initiative, is there to feed your e-banking, TradeStream, your back office with a digital original. So because those technologies are so specialized, they can bring value fast and they can interoperate through file transfer or APIs indeed. So that is the vision we have on the D&I initiative, is to help you increase your back office, not change what is working, so that you get value in a very cost efficient way. I'm conscious of time. Thank you very much, Sam, for your insights and for the presentation on TradeStream. Conscious of time, I think we have to wrap up now. So I would invite Mr. Shinvani to provide us with some closing remarks.
Thanks, Andre. And thank you all the panelists, all the speakers for sharing with us their views and their expertise and experiences. It was, I must say, that quite an enriching discussion which we had. I know we have run past our scheduled time. To just, I would like to sum up, if I had to choose what I have picked up from this seminar and what we should be doing going forward. The way I look at it, maybe I think the key issue over here, which for us is that one is the standardization and interoperability. These are the two key parts. And along with that comes maybe coordination with the regulations and the legal aspects. And at FEDAI, as Mr. Raja mentioned, that yes, we are keen, we are happy to work, collaborate with the other stakeholders, other partners, and also happy to provide a platform and a forum to take forward on these initiatives going forward, and for the interaction coordination with various industry bodies as well as the regulators. And as Venkat mentioned, that we also look forward to it. Maybe every crisis has got some silver lining in it. And this is the time when at least one thing we have already overcome thanks to this pandemic. We don't need to convince anybody about the need for digitization. Everybody is convinced. Now, only thing we have to look at it, how we can expedite the process. So I think we'll be working together on this, and I'll maybe in coordination with Andre and ITFA will come up with the kind of synopsis or maybe a paper on this, what all we discussed, what we think are the key issues which need to be taken up to be worked upon. And we'll be continuing with this effort going forward. Thanks a lot once again to all our partners from ITFA, Terra, and also TradeStream. And thank you to all the panelists and the speakers for joining us, and all the people who have been patiently listening to this. I saw just at one point of time, we had more than 160 participants in the seminar. I'm really thankful to all the attendees for sparing time on a Saturday. Thank you very much.
Thank you.
Thank you, Mr. Shinvani.
Thank you.
Thank you. And stay safe and stay healthy. Thank you very much.
Thank you.
Thank you.
Bye.
Bye-bye.
Bye-bye.
Thank you.
Thank you.